Good morning. This is Larry Edelson for my Uncommon Wisdom market video for Thursday, April 15th. Again, a lot more action occurring this week. The action is certainly picking up all over the place. So let's go right to the charts. Gold is moving up quite nicely. Last Friday it closed at 1161.40, just 60 or 70 cents shy of my buy signal. Spot closed at 1161.10, about 90 cents shy of my major buy signal. That is a signal that will indicate that new highs above $1,227 will be seen. So thus far we haven't seen that close that I'm looking for, but I believe we're going to get it very soon. How high could gold go once it breaks through 1,227? My target would be at least $1,300, possibly $1,450 or $1,500. What would drive gold higher in that next leg? The next phase down in the dollar, which is occurring right now, and I'll get to that chart in a minute. But I want to bring up at this point what's happening between China and the United States. You're hearing it all over the news. Some of it, much of it is not new. There's been trade friction between the United States and China for some time. China has held its ground on its currency. Is its currency undervalued? Yes, it is. But another way of saying that is that the dollar is overvalued against the Chinese yuan. It's two sides of the same coin. If the Chinese yuan is going to be pushed higher, which is what Treasury Secretary Geithner, President Obama, and Fed Chairman Ben Bernanke are asking, literally begging China to do, then the dollar must decline in purchasing power against that yuan. And significantly, that's the case against many of the Asian currencies. Today, Singapore revalued its Singapore dollar higher, and that meant that the dollar buys less Singapore dollars. So getting the politicians running around saying you need to China needs to revalue its currency higher is really only a politically correct way to say the dollar needs to go lower against those currencies. So keep your eyes on that. It's very, very bullish for gold. It's very bullish for natural resources and tangible assets. Let's indeed now take a look at the dollar index, which I'll pull up here. Last week I showed you that it had broken this uptrend line after failing above this breakout here. That breakout a little while ago, a couple weeks ago, failed. We saw the dollar index fall back down, then rally back up, and now it's falling again. It's not completely back in its long-term bear trend. That still exists, but in order for us to see an acceleration lower in the dollar, we need to see a close below this line, which is about 80 cents on the US dollar index. That could happen very soon, especially if China starts to revalue or seriously consider revaluing its currency higher by selling US dollars, which will push the dollar lower relative to the yuan. We could see a massive decline in the US dollar. That's going to happen one way or another. The question right now is timing. Watch the 80 level in the dollar index. If the dollar index closes below that, we're going to see an acceleration lower in the dollar index back into its long-term down trend and to new record lows in the months ahead. This is a currency crisis around the world. It is a debt crisis, absolutely. So let me restate that. It is a debt crisis, but the ultimate resolution here will be taken through the monetary system via currencies. That will be the ultimate resolution, with the dollar being substantially devalued and probably a new world monetary system a few years from now. Getting a little bit ahead of myself, I write about that extensively, so stay tuned to my Real Wealth Report and my Uncommon Wisdom columns on that. Let's now take a look at the Dow. Bear with me, I have a lot of lines on this chart. I'm keeping them up there so that both for my own benefit and so that you can see what's happening here. Let me get this down. Okay, that's about all I can do right now, because I want to show you the last several months of action here. I also, let me see if I can actually zoom in on this here. There we go. Let's bring that down now. Okay. The Dow is looking very, very good. It is beginning to take on financial asset inflation aspects, which it has done historically in the past at times, given certain unique conditions like we have today. We have hit 11,000, even closed above 11,000. I do believe we'll see 11.2, quite possibly my maximum resistance level of 11,600, 11,650, which would be about 1225, 1227 in the S&P 500. Again, I repeat though, my warnings, we are coming close to a temporary top in the Dow and the S&P, and unless you're a short-term trader who can scalp some long side profits in here and move pretty quickly and nimbly, if you're loaded up on stocks, I would start exercising caution and take some profits off the table. Let's now take a look at oil. Oil has been very, very strong. We ran up to $86 and we came back down to test support very quickly at the 82 level here. Now oil is rebounding back up to the 85 level-ish in the middle of this white space here, which is basically a bifurcation of these support and resistance lines that you see here. I do expect that oil will march higher in the next couple of months to $93, $96 a barrel. This is not a high that can hold for any significant amount of time. We did not get a spike high here, which is also supportive of higher prices in oil. Fundamentally, we're seeing demand pick up for oil as the Asian economies continue to fire away. The International Energy Administration, or IEA, just upped oil demand, global oil demand, back to 86.5 million barrels of oil per day. So we're seeing good substantial demand in oil that can keep it, continue to pressure it higher. And of course, with a weaker dollar, that only adds rocket fuel to the fire there. Stay tuned. There's a lot happening. I've been taking some recent rather nice gains in some of my trading services. So if you're interested, take a look at those. And certainly stay tuned because there's a lot of action coming up. Until next week, this is Larry.